So thank you everyone for joining us today. We have a very exciting and pertinent topic that we're going to dig in today, and that is to really look at what's standing in the way of businesses in the financial services industry, particularly from getting true ROI from AI. I am Ailish. I run the solutions team here at UnlikelyAI. And I've been leading teams that are rolling out applications and solutions to enterprises in regulated industries such as insurance, banking, accountancy, for anywhere they want to use AI, but they need those decisions to be, and the outputs to be explainable, consistent, and accurate. But I'm the least important and interesting person on this call today. I've got two very exciting guests. So the first is Luke, Director, AI Trust and Governance at PwC. And we also have Paul Cumming, fellow Irishman, who is Head of Audit Product Strategy at Grant Thornton. So I'd love if you guys could do a super brief intro of yourselves. Luke, why don't you kick us off?
Yeah, well, thank you for having me. And I'm very excited to have this conversation. Like you say, I think it's very timely. And we see a lot of difference between clients that are sort of leading the way and those that are not seeing the returns. So my background, before I was at PwC, I used to be the global AI governance lead for UBS, which is, I guess, the Swiss bank now. No, I shouldn't say that. There are lots of other Swiss banks. They're very, very important financial institutes. And then before that, I used to lead Responsible AI at Lloyds Banking Group. And before that, I helped to set up the Responsible AI group at ex-Accenture. So I've been doing this AI thing for about 10 years now.
Very good. Thank you for that. And over to you, Paul.
Yeah, I wish I went first because I'm not sure I can live up to that stature. So, again, really excited to have this conversation, especially coming from a regulated industry such as audit in financial services. So yeah, I head up the audit product strategy for what's now Grant Thornton Advisors network. My background, I'm actually an auditor by trade, very early in my career. So controls, compliance, governance sits very near to my heart. I got out of the audit space quite early and moved into audit transformation and finance transformation. So looking at how technology, starting with automation, starting with data, how we start incorporating them into the audit process, and now comes the AI era, right? Also spent a lot of time out in industry in big pharma, looking at supply chain transformation, finance transformation, etc. So, seen a lot of, again, automation, process mining, etc. And this is a really exciting era to be in this space. So that's me.
Awesome. Thank you, guys. Well, let us kick off, and I will see if I can share this slide. No. There we go. Okay, I think we are sharing slides now, so that's great. So yeah, look, I think this is, as we've all said, this is a very timely, a very pertinent topic for discussion. But before we dig into it, I wanted to kind of share a little bit of context about kind of where we've or how we've kind of come to thinking and talking about this. So as I said, at UnlikelyAI, we deliver near symbolic AI solutions to businesses in those regulated industries, because I think quite early on in the sort of what I call the Gen AI era, we realized that one of the key blockers to AI adoption and kind of rollout in this space was a lack of explainability, accuracy, and consistency in the outcomes of AI. But earlier this year, or I think even last year, we really wanted to kind of understand this better. So we commissioned a report into how senior leaders in regulated industries, so I think we were looking at healthcare, insurance, energy, finance, public sector, how they were experiencing this promise of AI versus the actual reality of implementing it. A bit of a spoiler alert before we go anywhere. most reported quite limited returns. So that's why it's, you know, a really interesting and important thing to dig into. So, you know, like, we know businesses have budgets for AI. We know employees are using AI, but like, what is stopping these businesses really from getting and realizing the return on investment, and kind of what can we do to change this? And both Luke and Paul obviously have very extensive experience around this, so really looking forward to getting into it. Just a quick bit of housekeeping. So there should be a CTA on your screen to download the report if you're interested in doing that. If there's any issues, please feel free to let us know in the chat. And we will have a quick Q&A at the end. So if you have questions you want specifically answered, also feel free to stick them in the chat. Awesome. So first up, I wanted to talk about one of these key findings from the report. So only 22% of senior leaders are reporting significant returns from AI. And that means obviously that almost 80% are seeing quite limited returns. And if you look in here, that, you know, a lot of those are, well, there's pessimism, and there's also some sort of hopefulness around whether that's going to change over time. But like, the thing that really jumps out at me when I look at this stat is, you know, what are those 22% doing differently? What is the difference between organizations that are seeing significant returns and the majority then that are not? So I wanted to jump to you first, Paul, because I think accountancy, you know, it's so ripe for AI use. There's a lot of repetitive and kind of manual tasks. Is this kind of ROI being realized, do you think, in the accountancy and audit space?
So I'll start by probably saying, you know, from the outside in, or outside looking in, it's certainly audit and accountancy is definitely a space where you can say, like, how are these guys not like completely reaping the rewards? But I actually think as an industry, especially being highly regulated, we're no different to where other companies are on their journey. AI is being deployed in ways where it's a lot of, where we're seeing kind of some successes around administration work, content creation, like, again, email writing, that kind of stuff is super helpful, and, you know, adoption's pretty high there. And as well around orchestration. So where AI is actually orchestrating a workflow with deterministic models behind it, where, you know, the answer that you're getting out is, you know, accurate, and you have a workflow behind it, whether that's a traditional RPA, Alteryx, or Python code, that's actually, you know, it's getting a deterministic answer. So that's certainly in those areas. One thing I will say though is that, and coming back to your point on the 22% adoption there, Ailish, is that technology is not the problem. It is not the showstopper. And it's certainly a lot of work we put in here is actually, the problem is around an execution, is actually an execution problem. So where we see a lot of success, either internally within our audit practice or externally with our clients, is where AI readiness is done. So data, we all know the data factor, right? That is not a new concept. That existed way before AI, even back to, again, speaking back to traditional automation workflows, crap in, crap out, right? Nothing has changed there. We all know that. And then also process readiness. Again, we saw over an age of automation where people used it to plug gaps in their processes, almost putting plasters over cuts. And you get to an age of so much tech that's doing that.
So in the interest of time, we'll move to you, Luke. I'd love to know, like, what do you think is the sort of most common thing organizations are getting wrong between deploying AI and then sort of getting those returns on investment?
Yeah, it's a really interesting question. And, you know, I was really enjoying what you were saying there, mate. I reminded me of a study that Gartner did. This is way back in the day, maybe 2007 or so, when I first started getting involved in project management, about how many projects actually delivered ever on their benefits. And I can't remember if the number was in the 10s or the 20s, but it was not a high percentage at the slightest. What the most common thing, I did some pondering on this, and it is quite hard to say. I think the most common thing might be quite a small percentage, because I think there are many different reasons across different situations. But what I landed on was I see a real difference between the leading companies and those maybe not leading in how aggressive they've been at attacking the highest value processes to implement AI. And the way that they're looking to implement AI is looking to be highly impactful. So moving away from co-pilots and things to help you do stuff in the background, more to sort of not only looking to make processes more efficient through introducing AI into core business processes, but also how they can reimagine those processes with the technology that's available today. How I've seen that working is typically by a more of a top-down measure. So where either a strategy house or a very educated board have said, we are going to ask their executive to change processes with AI in these ways to deliver significant either revenue growth or efficiency targets. So yeah, I mean, it really is about trust and faith that you think that investment is going to be worth it. And it is, I really think that the companies that are doing that investment stand to gain a lot, because the efficiencies they gain and the extra revenue they generate, they can reinvest back into more AI, efficiency. So I think the strategy of maybe sitting back and waiting to see what the leaders in the field do is, don't get me wrong, like it's definitely still very viable as a strategy, as long as you're prepared to move quickly as and when the market consolidates and as is when you start to see real signal on what's working. However, it does come with an element of risk that you really do want to be reaping those rewards so that you can further increase your ability to take advantage of this new technology. Yeah,
awesome. I think, kind of what I was hearing you say there is perhaps the 22% is just or the 78% of lack of returns is just poor project planning, which is unsurprising. I suppose my kind of follow up with that is then how does an organization identify the kind of highest value processes?
I think it comes back to whether you're going to do an exercise where you ask some, you do some research and find out sort of what are people typically doing in your space, which might take you an afternoon or maybe 2 or 3 short meetings, or whether you're actually trying to round up your business unit, your executive into a room for a couple of days of workshops to say, look, get in some people who really understand this technology and the capabilities of it, even if they don't necessarily know for your individual situation, and have a real strategic look at what are the processes where there is potentially the most value, and what is your risk appetite to introduce AI into them. The exciting thing about neurosymbolic AI and what you guys put out in the market is the different angle it puts on having something that you can trust, that you can see the explainability and transparency of. However, there are other products out there as well that maybe aren't quite so robust in terms of their explainability, and companies will need to choose what their appetite is for that lack of perfection. And I'm sure you'd also be first to say, Ailish, that even with your product, there are things that can go wrong. So people need to be ready and anticipating that and making a decision about where they stand.
Yeah, absolutely. As we've just seen on this stream, tech is not immune to challenges. So yeah, I have to absolutely keep abreast of that. I guess moving on to this next stat, one of the 70% of financial services organizations specifically cite compliance sign-off as being a significant blocker to AI rollout. And that's certainly something that I've seen where we've been, working with banks and other financial services organization building out POCs, and they've asked us to build in ways to look under the hood within the solution that we're building out. And it's because they know that down the line, compliance might not be involved in the early stages, but down the line, compliance are going to want to be able to look under the hood and understand exactly what's happening. And obviously, by their very nature, LLMs, operate inside a black box, so that kind of makes it quite difficult to do. I guess, kind of back to you, Luke. I'm curious. I've heard you cut low risk AI approval cycles from 6 months to 2 days. So I'm curious as to kind of like what you did to make that possible and how you sort of managed that compliance side of things while you did that.
Well, what I did was get a few more grey hairs. I think that was my main, the main thing. It was an audacious goal. Was trying to say, in UBS, where this was, how do we move to straight through processing, straight through governance, straight through approvals when it comes to low risk use of AI? And what we got working was very low risk, but we did get, I think, 46, by the time I left, 46 different use cases went through that 2-day process. Maybe it was 3 or 4 every now and again. But, fundamentally, it was a complete game changer. And what we did first was we got the senior leadership of the group who own the risk taxonomies. This is really important in regulated industry. So we got the person who owned data privacy, the person who owned cyber and resilience. We got the person who owned those topics. Once we've talked to many levels of their team, to agree who owned the risk of hallucinations, who owned the risk of unfair bias in outputs, who owned the risk of data exfiltration or prompt injection. And once we had agreed those owners, we were then able to look at, for these very, very low risk use cases that we were expecting to come through, which risks did we think they would trigger? Then for those risks, we went to the places that we'd already got to agree that they own them, to agree, well, what does a reasonable set of controls look like for these types of use cases? And through about 5 months of negotiations, we got those 26, I think, controls agreed. Then we worked with the platform owners who own the platform where these lower risk use cases will be built. And again, through a process, probably more like 3 months, we got them to build those 26 controls into their platforms in a way that we did sort of like a mini audit on. We sort of didn't take their word for it. We checked that if you did create a new project, and would it actually inherit all these controls which we designed. And I remember one delightful meeting for about an hour and a half arguing about 2 words within a control. So it was really tricky. But fundamentally, we also built a workflow tool which we built around Flowable, which could do the capturing of the data surrounding the use case in a more automated way. It wasn't, we started building it before generative AI became big. So it was it didn't start off using LLMs to pick up all the data, and we brought that in sort of later. But yeah, very hard. Took a lot of people looking each other in the eyes to say, are we really ready to let these people actually go live without anyone from compliance or second line risk checking? But we got there.
Wow. Yeah. Very, very impressive. I know from my own experience working with banks that there are a lot of people with a lot of kind of involvement and input. So I think that's, understanding who owns and who can sign off on stuff and trying to focus on that makes total sense. And I think there's probably a lot in that people kind of trying to bring AI or sort of, implement AI in their organization could really learn from that. I guess, it also kind of reminds me of conversations I've had in the accountancy space, I suppose. Like, whenever you're kind of working within financial services, there's strict compliance there for a reason, right? You're looking after or dealing with people or companies' money and livelihood, and it exists for a reason. And I'm curious, Paul, when it comes to AI, like where do you see the threshold, I suppose, for enabling that compliance rigor, but also allowing enough sort of flexibility or dynamism to kind of take advantage and figure out how best to incorporate AI?
Yeah, and I'd probably build on some of Luke's points, and Ailish, something you mentioned about early, right, being a key word. So I actually don't see compliance as an overall blocker anymore. So that stat is actually quite interesting. What I actually see as the key blocker is when, and these are on like really big significant projects, is where the project team go off and build the solution first and wait till the end when the product is 85-90% built, and then go back and think, oh, we should have included either the legal compliance team, or else think, oh, we should have built some sort of compliance and controls framework into the product itself. That's probably what helps me, having an audit background. I always think of controls. So some of the success we've seen on some bigger scale projects where it's actively being used on an audit, where a regulator is coming in to assess what has the AI done, is actually building a control framework around the process itself, whether it's in product or outside of the product. So then it makes it easier for us to actually get into production at the end, and therefore you get into production, you start getting ROI. Similar to the lower risk areas, if you can actually build a general control framework that almost one size fits all, then when you're pushing through lower risk use cases, that you have a control framework in place that you can reference to and helps you get in, rather than having to look at every single one, because you don't want to put too much time into the lower risk, because normally the lower risk are lower return. So if you have a kind of a lower control risk model around that, and then with the higher value, the higher risk ones that you're specifically sitting down with your compliance team to making sure that the compliance and controls are actually built into the product itself.
Yeah, makes complete sense. And I think it's very interesting that that's your experience around the compliance actually not being a blocker. And perhaps again, this is one of the challenges when you try and look at a landscape of things with that's really wide, because you have so many different variables in there, and actually, as you said, if you can kind of bring people along on the journey and they can see the value, then it's much easier to kind of get things over the line.
Yeah, and I think just building on that as well, Ailish, is that you mentioned earlier about leadership putting investment in, and I think if you look at leadership teams or board members across most companies, they're all pushing the AI topic. Some are pushing it probably a bit too fast because of the fear around AI, but they're all pushing it. So it's not that compliance are going to be there and want to be a blocker, but you can understand from their standpoint, when they're not being brought into the very, very, very end, it's almost like you left us out. So no, we're not going to block it, but we're going to take our time understanding and make sure it's fit for purpose. So it's just like, how can you overcome that hurdle and think a bit smarter earlier in the process, so that a hurdle actually doesn't really come into play.
Yeah, and also I guess if you're going to be on the line for something because you have to sign it off, then you're going to want to feel comfortable and confident that you can do that. I'm conscious that the tech issues has pushed us a bit over time, but I wanted to get into this third slide sort of briefly, which is around verification tax. So, I think we've all had the experience of spending time writing a good prompt, gathering context and telling an LLM exactly how you want an output for the LLM to produce, a detailed document or a detailed outcome. And then you realize, oh, I've got to spend loads of time going through this now because I can't trust necessarily that it hasn't made mistakes or that there aren't any hallucinations in there. And we're calling this the verification tax. And interestingly, the trust report showed that around 2.5 hours can be spent on both generating the AI results, but then also checking that output. And that kind of is cancelling out a bit some of the productivity gains. And it seems like this may also be playing a bit of a part in reducing what ROI AI can deliver. And this really made me think, Paul, of many conversations I've had in the accountancy space around this idea that because there is kind of repetitive manual checking and work done a lot of the time in accountancy, particularly, I guess, for like juniors in the space, a lot of human error occurs. And this idea of moving work from doing to reviewing could potentially mitigate a lot of that. So I'm kind of curious how you actually think of this idea of checking and verification in relation to that.
Yeah, it's a very interesting topic. And there's actually, I would think personally, there's different levels to it. So if you think of level 1, right, AIs have to becoming really good at preparation of documents. To your point, Ailish, it's taken a lot of the manual preparation work of a junior. I remember when I came out of college and first started working in audit, right, I was working 80 hours a week, and a lot of it is actually just manual, repetitive preparation of documents. So, I studied really hard in all these accounting exams, learning every single out of the standards. And then I was just doing copying and pasting, right? So I think it's a great space where our industry is starting to get to, where people are now coming out of college really educated with specialist understandings, and they're actually starting to be able to put that into use rather than just preparing. But on the verification tax in level 1, there's still where they have to review every single piece, right? Because of, again, depends on where you're using AI. In a black box topic, it's still not trustworthy, right? Where you're getting to, where I see level 2, is where you can actually start to see the reduction in that review time. So you've taken out the prepare time, and if your review time is still 4 hours, it's how do we get to a full, trustworthy, explainable, traceable piece of AI where they're only focusing in on the anomalies that are spit out. So whether it's it spits out an error that needs review or is flagged for further review, and we could put full trust on everything else that's put in. I think that's a very interesting space, and especially you guys are doing a lot on how we get to high levels of precision, explainability, traceability. So that's where we're working towards. Very excited to work there, because it means now we're getting to that real specialized area where the auditors are only actually focusing on the judgmental areas and not the repetitive manual pieces.
Yeah, and as you said, putting all of the stuff you had to learn in those exams to use rather than copy pasting. That makes total sense. And I guess sort of, Luke, I'm kind of curious. I'm going to make it a bit difficult for you. Like, what's the solution? Do you think? How do you resolve that?
Well, first, it's horses for courses. You have to work out what your risk appetite is. So it's interesting philosophically, whether we think about it or not, we all have a risk appetite for process error. So even auditors, I have known auditors who have confided to me in private that they may have got something wrong in the past. And yeah, never happens. So we accept a level of human error, whether we think about it or not. And companies really do have to think very hard about whether they are willing to accept a level of AI error and what that level is. The challenge, if you don't have that conversation explicitly, is you end up in parallel run forever. So no matter how many months of you showing that this process operating in a sandbox, behind a sort of partitioned wall, is producing better outputs, if people haven't actually had the conversation of what level of performance and what level of risk is acceptable before we actually, flip the switch and hold on to our our belts. I don't know. Once we actually jump off the edge and say, yes, we're going to commit to this AI talking to our customers, or this AI processing these transactions, like whatever it is that you're going to get to do, trying to understand that is really important. Then it's about making sure that you have checking in place, but you're checking the things that matter. So and I think a lot of this comes down to interface, and this isn't my original thinking. This is Ethan Mollick, if anyone follows him. That, we've this first wave of truly capable AI, we've dealt with via chatbot interfaces and what he calls walls of text, which is that sinking feeling you get in your stomach when you see that it's produced 3 or 4 pages of output and you're going to have to read it now. So I think there's a lot to be done with the interface to say, what is a better interface, and how do we get away from these walls of text down to the actual things that matter. I was reviewing some model documentation yesterday, and it was like, most of this is just the same on every model I look at. But I'm always searching for these couples, and it always, where have they put it? They've put this one operational thing that I really need to know. Where have they put it in this 50-page report? So I think if we can start architecting user interfaces and solutions which direct the checker's attention to what really matters, then I think we'll see significant reduction in this verification tax.
Yeah, no, that makes a lot of sense, and sort of, but I think both you and Paul are sort of saying something similar around this idea of like focusing on the bits that are high risk, or that need that kind of review, or that kind of stuff. Being able to surface that then speeds up that checking process, and so you're not kind of having to dig into all of it. And I think when you were talking, Luke, I was really reminded of that I think we have it's a real philosophical and psychological element that comes into the trust of technology generally, but particularly AI. I think of the self-driving cars, and obviously they are actually so much safer than humans who make a lot of mistakes and kind of cause a lot of accidents. But we have a much higher threshold for what we will accept when it comes to a machine. And I think there's lots of philosophical arguments as to why that.
And practical ones, right? Like, I have children, and if I was to learn that one of them had been killed in an accident involving a car, I would want to know, if that car was driven by a human, what my legal avenues were for ensuring justice for my deceased child. Now, and when I think of a self-driven car coming to exactly the same outcome, who, as a parent, who would I be looking at to be like, who is accountable for this travesty? And saying, and I do believe it, I believe that driverless cars will be the future. I believe they are far safer. I believe in the metrics that I've read. But I think we have a real ethical and legal question, which I don't think gets enough airtime. We need to be writing accountability frameworks. We've built our law around individual humans for the last history. Therefore, we now have a very different type of reality where, unlike anything that's ever come before, these AI systems can make decisions. And unlike RPA, which was just executing what a designer had put in place, those decisions may stray outside of what the developers actually thought was going to happen. So how do we deal with that? Well, I mean, I'm very conscious of, and I'm looking at time, I hate to give a problem without giving some sort of solution. So I do believe that there are accountability frameworks where we can talk about collective responsibility as a company burden, and we can look to the profits that these companies are making to be redistributed to the people who they cause harm to, in a way that it has legal clarity for both sides. Because I'm sure those companies are also, I know, their shareholders are worried about what do the first few really big news stories look like when their products do things they weren't expected to. So providing some sort of insurable legal basis for these conversations to happen, I believe, is not only possible, but I believe we actually have a moral imperative to get going.
Yeah, absolutely. And thank you for also adding the the solution is helpful to kind of close that loop. Very conscious of time. We've had some really interesting questions come into the chat, so I'm gonna wang through two of them, and then we'll probably wrap it up from there. So one of the questions, and I guess for both of you, maybe someone asked, where do you see the biggest gap between what firms say they're doing with AI and what's actually happening on the ground? And I find that quite an interesting question, because I think there is a lot of this AI performative stuff happening. So yeah, keen to know what you both think. So maybe start with you, Luke.
Yeah, AI theatre. The most common one I see is people claiming that they're building agents when what they're really building is a RAG architecture, a retrieval augmented generation architecture, which is, I would argue, not having individual agency, not acting with an amount of autonomy, and not orchestrating or going through a series of steps which are not known at the start. So I think a lot of people claiming big numbers of agents deployed in our organization, when I would argue that is not the case.
Yeah, I fully agree. I think there's a lot of performative agent talk happening out there. Over to you, Paul. What do you think?
Yeah, I would probably two things. I'd probably say don't listen to the fear mongering. Don't feel like you have to do it yesterday. Slow down, take a deep breath, and actually focus on where those real ROI use cases are. Everyone, I think social media has driven this factor. Same with everyone else, right? On social media, everyone's a multi-millionaire. Realistically, they're not. It's the same with the AI piece, right? Yeah, you're not falling behind. Slow down, take a deep breath, and figure out those real use cases, and work through some of the topics that we spoke about today around breaking barriers, around compliance and stuff like that. And the second part would be, again, making sure your processes are ready. Don't make the same mistake that we made in the RPA and automation area where people used it as band-aids over 60-year-old broken processes. Actually, if you do want to make a true ROI future state for your business, actually take the impact now to actually redefine them and make them ready for the future. So
yeah, no, absolutely. I think those are really important points, especially the stop and take a breath, because it's very tempting to think that everyone has it all figured out and you're the one who doesn't. I guess last one for you both, might be nice to kind of finish on this note. What's the one thing, I guess, that organizations should stop doing or should start doing if they want to really feel like they're going to be able to get good returns on their AI use in the near to medium future? Why don't you jump first with that one, Paul?
It's probably the same answer. Again, it's probably the exact same answer, because I see it everywhere with our clients internally. But maybe something to add to it is, and again, it comes back to the stop and pausing and take a deep breath. Like, people are getting AI burnout. And I don't mean AI burnout in the case that, they're deploying too much AI and they're trying to read it all. It's actually AI burnout in the sense that, staying up until 4 o'clock in the morning asking ChatGPT is, how do I deploy AI? And trying to figure out the 1,000 and million ways to deploy AI. And what ends up happening is they don't deploy any, or they don't deploy anything actually really effective. So it just comes back to, people know their businesses well enough just to step back and actually think like a human for a second, and not think like a robot.
Yeah, I mean, I've heard of people waking up in the middle of the night to get to prompt their kind of Claude code so they can continue working while they're sleeping and stuff like that. And I think that's carrying over into the enterprise world. What would you say, Luke?
I think it's spend time. It is, you know, just another way of saying what Paul's saying, like, get your leaders into a room and talk about it, and try and talk about the stuff that you're not usually very happy to talk about, like, I don't really understand this, or I don't really understand how this could make a difference, or surely we can't trust this. Like, have these types of conversations and get things out in the open, because the worst thing that happens is that you will realize that you've all got quite a lot of fear and quite a lot of worry about it. But the best thing that happens is you realize you've got a lot of fear and you start thinking about, all right, well, how do we reduce that fear? Because I was debating whether to say, get out there and build something, but I guess it depends on the audience of this work stream, and also the people that can actually enact change at scale in large organizations, which still tend to be the people in charge. Because I have found through building things just a world of excitement in terms of what it can do. Like, it is doing a lot of stuff for me in the background today, preparing for my tomorrow. And it's like magic. It is literally like magic. Yeah. And so maybe I'll leave it there.
Yeah, no, that's great. And I think combining sort of what you both said, I think, like, you have to understand how to get the most out of it, and no one will understand your business and where the gaps are and where the kind of, you know, real opportunities are better than you and the other people in the business. So just going and doing and thinking about it, but sort of taking the time to go on that journey is the key thing. We've run over because there's just so much that we could talk about here. I feel like we could do another 45 minutes and still not be done. So just wanted to thank you both for your time. I think that was really incredible, some amazing insights, and I hope there's lots of takeaways for people to go away with in terms of understanding that they're maybe not alone if they're not getting what they want out of their AI investments, and B, you know, like what to do about it and where to start. So yeah, I think this has been brilliant. So yeah, thank you both. And I think if you have questions or follow-up questions, you should get a follow-up email today, and you can dig into that. But thank you guys both, and see you again soon.
Yeah, thanks, Ailish.
Thank you very much.
Bye.
Bye.